Welcome to NatureBack, Gregory.
Hi, nice to see you, and thanks for having me.
Tell us what you do on.
Yes, sure. So what I do is I founded and I run AO, which is a venture capital firm focusing on the built world, which is everything related to real estate and construction industries. And our focus is backing the positive transformation of the industry. We were launched in early 2020, and we are the largest VC firm in Europe in the built world.
How do you find the companies you work with or invest in?
Yeah, a good question. I think there's no silver bullet. We have different ways to source. Let's separate the inbound, so people coming to us, and the outbound is us reaching out. Let's zoom in on the outbound, which is for us a mix of different things. We're very thesis driven. We have a research team, but we also have a data science team. So I always like to say that our outbound is really thesis driven, powered by a data science approach, which allows us to really leverage on our expertise, the specialist lens that we have, looking at the world. And through all those different verticals of research, of data, of just thesis building, we go and map out the landscape of companies that we are interested in and reach out to them. The inbound is just people reaching out to us because we have done many deals in the space, because we're quite visible and they buy into our view of the world, our thesis, and why we do what we do. So they seem to be excited to reach out to us.
Positive transformation. It kind of the slogan of your company. It kind of covers everything, not just they have to be building related, right?
Yeah. So the best way to think about it is think of the built world. So built world is everything from supply chain of materials, new materials, everything surrounding design, architecture, engineering, everything surrounding construction, and then all the things that happen post-construction in and around buildings. So think of building operations, electrification, etc., and more broadly, energy transition. So when we think about the built world, which is real estate and construction, our thesis is very simple. It's the largest industry in the world by far. It's more than the entirety of stocks, bonds, crypto, and gold combined. It is one of the least digitized industries in the world, and is by far the most polluting industry in the world. And so when we think about positive transformation, and the reason why we don't call ourselves, for example, an impact fund, we don't want to be called an impact fund, we think that backing the positive transformation through two types of investments, the ones which are targeting directly the likes of decarbonization or energy transition or climate resiliency, it's very clear they are impactful in a direct manner. We don't think it's enough, because it's such a large, fragmented, antiquated industry. You also need to invest in the digital transformation, the data science, in the automation, so that the industry becomes more fertile for innovation. And then every type of solution related to climate will be able to scale faster by the sheer nature of having a more data available, more automation available. So in our mind, what we do is positive transformation is really investing across the spectrum in those impact native and those impact enabler or accelerator that are more digital kind of infrastructure related.
So you're not always, going inside the walls of the buildings with the startups you invest in, more maybe even on the data side.
We have satellite companies, we have software companies, AI companies, deep tech companies, hardware companies. It takes all sorts of different solutions to tackle the many facets of the problem. And so we're not constrained at all within the building. As I was saying, we have one company, which is a satellite company that's using infrared thermal imaging to map out the thermal efficiency of any building on planet Earth with a level of resolution that's never been reached before. That allows all sorts of stakeholders, governments, banks, insurance, asset owners, to identify where the issues are, which buildings are the most inefficient, and then to allocate their time and the resources to fix them. So, as you said, we're not constrained by space in any way, shape, or form.
You said that the kind of the sector is the most polluting one, and thinking about in the recent episode we had a company working with concrete and cement, that's on its own is probably one of the most polluting industries of the world.
Yeah.
Any good examples from your kind of maybe recent investments, which would, I mean, you kind of described the whole spectrum, but maybe something specific.
So to give you again the numbers, so 40% of global greenhouse gas emissions come from real estate, right? So when you compare that to cars, everyone's so excited about electric cars, going to change the world. Electric cars are high single-digit carbon emissions. So when you think about aviation, everyone talks about aviation, and it's 2%, right? So the order of magnitude is so staggering that it has to be a wake-up call for people to say, okay, we're running out of time. Supposedly by 2030, we need to be in a much better place than we are today. Where are we going to spend our time and our money? In the stuff that accounts for 2% or the stuff that accounts for 40%? You give the example of cement. I think cement accounts on its own across many different industries for 8%. Yeah. So coming back to the real estate and construction industry, the best way to think about it, of this 40%, 1/3 comes from embodied carbon. So everything that is construction materials and construction processes related, that's what we'll put, for example, the cement in the bucket. And then 2/3, which is therefore the majority, is coming from the operations of those buildings once they are built. Heating, cooling, etc. So give you an example. We have this company in our portfolio based in the US called Passive Logic, which is the first fully autonomous building management system that's leveraging AI and deep physics to operate your buildings completely and fully autonomously, which means that they reduce the energy consumption by, depending on the building, etc., 30 to 60%, and the carbon emission by the same amount. So again, if you come back to the math, 2/3 of 40% is a big number, and if you can reduce that 2/3 by half, it's the equivalent of eradicating the emissions of entire spectrums of industries, aviation, this and that. And so that gives you really a sense of the magnitude, but also the importance of tackling the real estate and construction sustainability issue. Because unless we tackle those, we're never going to solve the emissions issue. And I don't care how many meatless burgers or paper straws we come up with in the world, we're never going to get any closer to the goal. And so size matters for this issue.
Life is hard, but finding a really great podcast makes the days go by so much easier. Hi, my name is Blue Toulousma. I'm a writer, an emotional intelligence coach, and the host of Humanize with Blue Toulousma, a podcast where we believe that when you humanize everyone in the room, a great conversation is almost guaranteed. Join us every week here on Electricast as me and my guest co-hosts unpack big topics and interview even bigger personalities with a sense of humor and a dash of mischief. If you're looking for a new best friend in your head, we've got you covered. Electricast.
People getting that wake-up call, are they actually, starting to move? Because often real estate is seen as relatively stagnant industry.
So two answers to this question. In general, on the climate discussion, there is a lot of non-educated people about the topic that are just conveying the wrong messages and that are discrediting the people who are actually trying to do the right thing. And so if you open the newspaper or go on TV, often you have the wrong people talking about it. And often you have the climate fanatics that chain themselves on the highway, great, but it's discrediting the movement. And therefore, when you come out and you're trying to do the right thing and you're talking about those numbers that I'm talking about, often people think they're the wrong numbers, or they think I got my data wrong because they've heard from someone else that it's private jets who are the most polluting thing in the world, when private jets is probably 0.1%. And so I think there's a misconception that has been hurting the movement. But on the other side, people are waking up. When you show people data, facts, it's hard to really argue with it. And specifically in the real estate industry, which is quite backward looking, people didn't really care about sustainability, didn't care about tech, didn't have to either. They're waking up. They're waking up either because there is a sense of altruism. They want to do the right thing, right? But often it's not about altruism. It's about the regulators knocking on their doors, the banks telling them they're not going to refinance their building unless it's more sustainable. And so there's a stakeholder pressure from regulators, banks, capital markets that is forcing down innovation and sustainability onto those large stakeholders. In the end, what matters is the result. Doesn't matter if it comes from a good sentiment, i.e. people wanting to do the right thing from the get-go, or if it's a financial decision. What matters is that we get there, in time, or with the right resources and the right initiatives. And we're seeing that change and accelerating at a very, very fast pace, which is great. I think people are starting to see more signs of climate change. Last summer, one of it was 45 degrees. The summer before was 43 in London. Literally everything was melting. This is almost like everything we were told 10 years ago that what the world would look like when we hit a big problem, fires, floods, it's happening, it's there. And so, again, I don't want to get into the debate about whether it's really because of climate or not, but people are like seeing it in their day-to-day life. And so therefore there's a greater sense of urgency than probably ever before.
That's, gives some hope for the changes to start happening. The question I wanted to ask, the real estate sector, you said that there are a number of parties which are kind of forcing the sector to change. How much is the kind of current, headlines of the commercial real estate sector going under, or the kind of the current problems which are coming actually from the kind of high interest rate environment? How much is this maybe hampering the move towards sustainability, or maybe it's boosting?
So I would say real estate is going through a fundamental crisis like hardly ever before, all the reasons you just mentioned. I would say on top of that, the sustainability pressure that's coming from all those different stakeholders I've said is really tackling the sector at a time where it's already on its knees, and therefore it's even more pronounced the pressure that you get from it. Today, if you have a commercial building, an office building, and it's not either on the way to become up to standard or up to standard at all, there is absolutely no way you will be able to sell it. At the very least, not for a price that's anywhere close to your expectations. The second point is, if you want to get top-tier tenants into those buildings, Apple, Amazon, Google, you name it, those guys have made a pledge to be net zero over a certain day, which means they will decarbonize the supply chain, of which real estate is a big chunk. You won't get those guys. And so when you think about the impact it has on real estate is nothing else but the present value of cash flows. If you remove the cash flow or reduce it dramatically at a time when cost of debt is higher, etc., the impact on terminal value is ginormous. And so there is nowhere to hide. There is no way around it. There are some people who are saying, well, look, because the industry is already so much on its knees, maybe the regulators are going to soften the stance to preserve an entire industry. It doesn't matter. Even if the regulations soften, you still have the same pressure point for Amazon, Apple, Google, and pretty much any credible corporate on the planet that is making those pledges. So there's no way back. It's clear where it's going. And we are happy to see it happening because it's creating a massive market opportunity for all those companies that we back, but also it feels that the time is right. Now, it maybe wasn't right 5-10 years ago. The time is right and the market is more mature than it ever was.
You talked a little bit about the fund kind of on a big perspective level, but what about kind of on a practical level? What kind of startups you're investing in? What stage? How big tickets? Usually, do you lead? Do you co-invest? Any kind of the kind of big logic on that side?
So we invest from seed to Series B. The candidate that wanted seed, it's already with the product, already with traction. So again, we try to leverage the fact that we are specialists in one kind of vertical, the built world. That's all we do every day, all day. And therefore, we take advantage of that to build conviction and ownership ahead of maybe the rest of the market, meaning the generalist funds, for whom it might become obvious a bit later. And it's not because we're smarter or anything, it's just because we do that all day. So, if you can build conviction early when that's all you do, then maybe you should find another job. And so that's what we do. Typically, we invest in Europe and in the US. 60% is Europe. I still include the UK when I talk about Europe. I refuse to abide by Brexit, but about 60-40. And I would say our ticket size is a little bit flexible. I think unlike some funds, we're not terribly obsessed by our ownership on day one. We care more about our ownership and the capital we have deployed by a certain time, typically Series B, because we are very involved with those companies. We are adding a lot of value by the different things that we do. We bring them revenues, we connect them with some of our LPs, we can be customers, we help them on those things that we also, again, we do all day, every day. And usually that allows us to build more ownership over time. And so we're less obsessed with what we do on the first day. But I would say typically the earlier, the smaller the ticket. So a seed could be anywhere between 1 and 3 million. An A could be 3 to 6, and a B could be 6 to 12 kind of ticket size. The idea is that, the earlier we go, the more shots on goal we have by the time the company gets to Series B. So if we do the seed, we can do seed A and B. If we do A, we can do A and B. If we do B, we'll just do B and potentially one follow-on. So we're mindful of the capital allocation of our funds more than the ownership targets. We do few investments a year because we want to be very involved. And it would be hard for us to be as involved and productive as we would like if we were making 20 investments a year. And we try to stay true to our core principles on that front.
So if 20 is too much, you usually do 10 or?
We do less than 10 a year.
Okay. You started in 2020. How much has this kind of turmoil on the market over the last 2 years having had impact on you guys?
So again, I would say a lot of the froth that you've seen in the market was on the later stage stuff, where a lot of the generalists or the crossover funds were able to go. A lot of companies that were not really tackling a real problem or solving a real issue were getting a lot of traction because money was free and flying around. So I would say a lot of businesses that should have never been funded were funded. And our industry has been affected, but it's been tremendously more resilient than any other industry. Why? Because, again, for the type of business that we back that are solving mission-critical problems, that are really creating an ROI, there is still a need for that. And so we've always been quite conservative. At the time, we were told that we were too conservative, and that avoided us to do, let's say, some of the stuff that is today a little bit more hairy and complex to deal with. And again, it's not because we are smarter or anything. We were just conservative, and that happened to have paid off. And so I think the market is better today. It's more investor friendly. However, I will say in the last few months, it's turned again, and it's getting heated again in very specific areas of field. But we've been pretty okay by virtue of having been a more conservative investor. And so now we're not spending as much time dealing with issues. We're more spending time looking for amazing, great companies. And that's what we're doing out of our new fund that we've raised recently. We've already made 4 investments in this fund, and we're aiming to be quite active from here on.
Probably a good time to kind of come out with a fund. The valuations are maybe somewhat more friendly than they used to be 2 years ago.
Not everywhere. I would say they are higher than they were 2 years ago in some parts of the market, unfortunately. So again, you have to see through the noise a little bit. I think the AI wave, as fundamental as it is, has created more frivolous behavior from investors that are seeing, the stock market go up, valuation go crazy for a very specific sector. So I think it's getting everyone a little bit tipsy again. So hopefully there's no hard hangover at the end of this.
The tipsy part, is it related just to AI, or is it some specific things also in the built environment?
AI and climate. So the issue with climate is it was probably the only place where most funds were able to raise money in the last 2 years when the liquidity withdrew. And there's a whole sort of fundamental reason why it's a good place to be. But a lot of generalist climate funds have raised money. And there's too much money for the amount of bankable opportunities right now. And so there's a demand-supply imbalance between capital versus great opportunities, which means that it creates pressure on price. And people are somehow kind of needing also to have climate-related portfolio companies in their funds to show their LPs, etc. So I think that's where you have a bit more pressure. But again, we try to get around that by building this conviction early by being a specialist in our field. And so let us do our job. Let us try to be early as we can and help our companies and just mind our own business. And just continue. So far it's paid off, but, we always have to check ourselves, to do a bit of introspection, making sure, we challenge ourselves in our thinking. And so it's definitely never a dull moment, to be in this industry.
Absolutely. Of course, this demand supply imbalance means also a message to all the listeners out there. Go and, build great climate companies.
Look, absolutely. I think in this day and age, the ability as an entrepreneur or as an investor like us to do well by doing good and finally do both without any compromise whatsoever, I think is a tremendous luck and opportunity to really be fulfilled in your mission and in your life journey. To be able to do both. Often and always back in the day, people used to say, if you want to do good, you're going to compromise how well you do because profit and purpose don't go together. But I think today we have this opportunity to do both profit and purpose, do well by doing good. And so we're very excited. And I think it's drawing a lot of entrepreneurs that are either first-time entrepreneurs or repeat entrepreneurs who really want to feel fulfilled and are as mission and vision driven. And so it's great for a lot of companies. And also, again, a lot of verticals that were pretty useless that used to get funded, don't get funded. So there used to be a brain drain a little bit into stuff that is unconsequential. And so that's changed. And so that's just more people coming towards the as we like to call it, tech that matters.
Thank you, Gregory. That's a good message to wrap up this discussion. Thanks for joining us.
My pleasure. See you soon.
See you soon.
Welcome to Ringside with Ray and Prince. My name is Ray Leonard Jr.
Oh, is that the set? No, that's just my dad.
My name is Prince Daniels Jr.
Daniels again with a big home. Touchdown.
On this show, we come to humanize
athletes, entertainers, business executives. We're going to see what makes them tick.
Tuesdays, 10 a.m. Pacific time on Spotify, Apple, Amazon, and wherever you get your podcasts.
We'll see you there. Peace and power.
Electricast. Today is working for me. Do you believe that for yourself? Hey, I'm Pastor Julie, and I want to empower you through encouragement. Inviting you to my podcast, Big Truth Encouragement, where I unpack living a faith-filled life. I created my podcast for the ladies, but gentlemen, you'll gain something too. So I invite you to listen to Big Truth Encouragement on Electricast and any platform where you listen to your podcast.